Good evening, everybody. Welcome to the Asian Express by In the Money Stocks. This is the week beginning July 14, 2013. Thank you all for tuning in. We're going to start off with the Nikkei 225 index. What you're going to see here is that the Nikkei has been chopping higher ever so slightly. It's putting in a little bit of a bullish consolidation pattern. The resistance levels that you want to watch for in this index right now, if price can get above 14,600, which is still the resistance level in play at the moment. If it can get through there, then there's potential upside, possibly to around 14,870. So watch for that level going forward. I'm going to put that line in there, 14,870. If I can ever draw it in so slightly. There we go, close enough. But 14,870, and then ultimately down up to 15,061. Will it get there? Does it get there? I'm not 100% sure. But if price starts to move in that direction, expect it to get up there. But there's a lot of short-term resistance around these levels. So again, price looks to be consolidating to try to get up through that level. But currently, this first black line where my cursor is very, very good near-term resistance. And I still think price has to prove itself that it can get up through that level. I'm not 100% sold, nor am I sure that it will get up there. But right now, a little test of it is probably likely. Does it get through there? If it does, then you're going to watch that 14,870 level, and then ultimately all the way up to the 15,061 level. So a lot of resistance for the Nikkei, but these are the big three levels that I'm looking at in the near term. If by some chance the Nikkei does fall from current levels, obviously you're going to watch the 12,500 area, the 200 moving average, and we'll leave it there for now. But I do have downside projections should we get down there, but I don't think that would happen this week, at least not at the moment. I'm going to go and turn my attention to the Shanghai Index, which is mainland China. The Shanghai Composite right now reached a very, very important resistance point that we talked about last week, the 2091 level. That level was hit perfectly, and then you got that nice little bit of a pullback in this market. Tonight is going to be the big GDP report from China. Again, that's a lagging report, so we'll have to wait and see how the markets react. But either way you slice it or dice it, let me just give you the upside levels. Should the Chinese market react positive this week, you're going to look at 2150, which is going to be right here, 2150, and then after that, the market could go up to 2212, 2213. This is where either way I think the market will stall out. This is a level I would look to sell the Shanghai Composite, or if I own anything in the Shanghai Composite, I'd be looking to at least trail my stop loss, because this would probably be its maximum upside on a daily chart, at least for the near term, 3 to 5 days from that line being struck. At the moment, we're going to have to see how the market reacts, but so far you do have a pretty good bottoming tail, some follow through, a little back test of the bottoming tail close, and then another pop higher. Now, if this price comes down again and trades below this 1850 level, watch out below. This can go all the way down to $1,690, maybe $1,688, which would be way, way down here, even a little bit lower than that 1,700 level, which was our first estimation. So, again, it could go all the way back down here. But right now, we're not going to look for that at the moment, because you still got to get through this pivot, get through the pivot low, and then it would be lights out to the downside. But right now, we don't want to expect that, at least not yet, until price starts to make its move that way. Again, upside levels 2150, 2212. That should be pretty much the extent of the rally that it's had off of these lows. You're getting that little zigzag type reflex bounce, but overall the bigger time frames are still very, very negative, at least at the moment. We're going to look at the Hong Kong market. Hong Kong has been holding up very, very well. First level, second level, third resistance level is going to be right at 2200. Again, maximum upside would be 22,400 right now. Your next big resistance level would be 22,000. But look how these lines each have been hit right there, and then that would be the next level right at 22,000. Maximum upside on this index, on the daily chart at least, is going to be 22,400 exactly. So again, That would be maximum upside here. If the Hang Seng, which is Hong Kong, starts to come back down, the big level is still going to be 20,600. A break below there, then the 19,500 level could be tested. Ultimate support on the Hang Seng, from what I can see right now, would be around 18,000 if all hell broke loose to the downside and the markets started to really sell off sharply. But right now we're not expecting that, at least not yet. Let's take a look at the BombaySensex Index, which is India. Right now this looks very, very close to topping out on the daily chart. So again, I think it could get to around 20,051, 20,055, somewhere in that area. That would probably do the trick, though. I don't think it's going to get much higher from here. You're coming into a very, very good resistance point right here. Expect maybe a potential little move of upside, 20,051, 20,052, but that would be it on the daily chart. It's going to need to pull back, or it's going to need to consolidate the way it did down here in order to push the higher price. Right now I don't see higher price than that at the moment. Maybe I'm wrong. If I am wrong, you're going to watch for the pivot here at 20,200. Also the pivot here at 20,400. So again, the BombaySensex Index, which is India, again, very good resistance, shortly higher, a little bit higher from here, 20,051. Let's go over to the Kospi. What we're going to see here is that this has had a very, very good bounce. Resistance levels coming into play. First resistance around 1892. Next resistance will be around 1920. Maximum move would be the 200 moving average right here. This is where you could look for a sharp pullback, at least on the daily chart. If this level down here gets broken, there's a big, big downside level below. It's going to be all the way down to around 1650. So again, that's a big if. If that level down here got broken, then you'd have to look much lower, around 1650. We're not expecting that right now, but just in case something does happen, you always want to know your levels. Let's take a look at the Straits Times Index, which is Singapore. Right now, it's been a very, very good move. Price pulled back just before hitting the 50-day moving average. From my vantage point here, from what I'm seeing, right now, this is still holding up okay. You've had a pretty good bounce. Should price trade a little bit higher, you're going to look at around 33.11, which would be major, major resistance. Close enough. And then maximum upside on this index, in my opinion, would be around 33.30. I don't see price getting much above there, at least not yet. So this is where you would expect a major pullback to occur, somewhere in this vicinity. Most likely the upper line before the lower for a major pullback, but either way, there's very, very big resistance in this level on the daily chart. Let's take a look here at the Taiwan indices, and what you're going to see is Taiwan has been soaring. Even went through my black line resistance point of last week. I'm just going to give you the maximum upside right now, which is 82.98, 82.99. So let's just call it 8,300, round it off. This would be maximum upside. This is where a pullback should occur. Also a prior breakdown level. So again, watch for a pullback in the Taiwan indices right now. That would be a very, very big level. Downside, there's still a lot of support to go. You got this big pivot at 7,900. Then you got the low here made on June 26th. So there is very, very good support in this chart. If this level broke down, we'd have to look at around 75.75. That would also be very, very good support level as well if price broke down, which we don't expect at the moment. We think it could get here first before it moves lower. We want to take a look here at the Australian market. And what we're going to see here is that Australia has had a very, very big bounce. Tremendous bounce on the upside. Right now, I have to say the daily chart is bumping up against some pretty good resistance. You also have a little bit of a topping tail in place at the moment, but you're going to watch 50.34. This is probably going to be a big resistance level. If price can get through there, if price can get through that resistance point, there is some more upside potential. But I have to say right now, I think that price, even where it is, has a lot of resistance, and this index may start to pull back. But either way, the next big upside level would be 5,095. So keep that on the radar. It's going to be 5,095 right there. That would be your next big resistance, and then it would obviously be double top. But right now, you do got a topping tail. There could be a pullback right off of this current formation that's on, or that's in the chart already. Okay, and last week, or I should say Friday, the Australian index closed at 49.73. So again, you want to be a little bit careful. The big news tonight is going to be out of the Shanghai Index. We'll see how this market reacts to the GDP number. Rumors, or I should say whisper numbers, are 7% GDP. There also have been some talk about 6.5%. So again, it looks like a little sandbagging going on there. They're looking for lower GDP. If it comes out better than expected, the market may get a little bit more of an upside bounce. So I don't know what's going to happen. We just care about the reaction. We don't really care about the news. So we'll see how that all plays out going forward. All right, with that said, that's pretty much a wrap on this week's Asian Express. I hope to see you on the charts next week. God bless, and we'll do it again.